Hello everybody, welcome to this week's market analysis webinar. Myself, Jasper Lawler, here presenting for today, and of course it's for London Capital Group. Now, as usual, we will go through the major asset classes offered by LCG. So that includes the Forex market, stock indices and commodities. If there are any special requests of markets to have a look at, then please just let us know in the forum during the live webinar. Or if you are watching a recording of this, obviously we can't cover these markets live in this webinar, but still nonetheless contact us and we'll be in touch with all the information hopefully you're after in terms of these market moves. Let's jump over to the trading platform. So here is the LCG Trader platform now. Lots of interesting moves taking place in markets today, but nonetheless, I will start with the Forex market as we always do. NH, okay. And you can see it's modified our chart down here. This is the Chinese yuan. There's been some massive moves in the Chinese yuan today. We've rocketed through this 7 level. And so now we've reached 7.1, and as a result, because of the implications it means for a trade war between the US and China, this is basically China allowing its currency to depreciate against the dollar, and obviously by doing so mitigating some of the effects of the new US tariffs on China. So the trade war turning into a currency war as well. So that's bad news for markets in general, and this is the currency pair that's doing it. We tend to think there's a bit more upside from here because it seems like a big level, a big psychological level has been breached, and it's a game changer for this particular currency pair. So potentially 7.25 in the offering here. Check out my YouTube video I did specifically on this analysis. Now I want to jump back just to the usual major markets that we cover. So I'm going to start with the euro. So if you remember from last week's webinar, we had two potential scenarios when we were sitting around the 111 level. Was one that we get a little pop and then we can pull back for a... so we were sitting here and we were wondering whether the range would hold and then we'd get the opportunity to trade back into the range. We got a break lower, but it looks a bit like a false break at this stage. Now, the bigger trend is lower, but only marginally lower. It's a very rangy move lower. And so while this trade is strictly speaking counter trend, I don't consider it high risk counter trend because it's such a rangy move lower. So potentially what we're looking at here with the market having taken out this previous peak here on an intraday basis, of course, we've not closed for today, but still on an intraday basis, we've taken out that previous peak. And what could happen is that we will drop lower and that people sell the old high or even sell the 112 level and plummet down to new lows. That is possible. The scenario that we're potentially envisaging here is that actually this has proven to be a false break below 111. We've got a nice reversal here which is kept going with decent momentum, and that actually we're still more or less speaking in this rangy downtrend, and there's room for a pop higher. Now if that pop higher only goes as far as 112, then obviously even if we get the dip down towards 111 first, you're not looking at much upside there. So really for this, for any upside to be worthwhile looking at, it needs to be a move up towards 113 and these previous peaks over here. But at these current levels, it again wouldn't be from a risk reward perspective. We've got the lows down here, we've got us in the middle, and the next resistance area at 113. Again, not worth it. But if we do get a drop, which you'd imagine in a kind of bearish trend we should do, and then we challenge 111 again, then that could be the time. What the market does at 111 will tell us whether this move up to 113 is indeed a possibility. If we just close straight down through 111 again, then we can assume that this particular bounce is not on and that a resumption of the downtrend is on, with a move down to 110 and then 109. Let's move over to dollar yen. Now this is one of the fastest moving markets. Interesting that the dollar yen moving very much in the opposite direction to dollar CNH, that Chinese currency pair. This is a combination of a flight to safety in the yen, and also just the dollar yen pair very much correlated to US Treasury yields, and Treasury yields are plummeting again in that same flight to safety. So all that put together, it looks like we're probably going to go down, challenge 105. Now, if I zoom out the chart a bit, you can see that we're hitting key support areas down here at 105, levels that haven't been hit in multiple years. This is the daily chart zoomed right out. You can see, obviously, if we take out 105, it's pretty major. I mean, this is the huge devaluation thanks to the Japanese central bank quantitative easing policy. They've not added to the policy in years, and markets now starting to challenge the central bank to do more in effect. So again, if we take out 105, we start going down to pre-QE levels from Bank of Japan, which is quite mad because they are still doing maximum QE right now. They've not really tapered at all. So we'll see what happens if indeed the market gets to 105. We'll see what the response from the Bank of Japan is. They may have to introduce some emergency stimulus. So it may be that we just don't get a trade here. So here's the point. The market is already crashed down from 109 to 106. Just 300 pips in just 3-ish days. With the risk being up here of 109 kind of defining the downtrend, selling after this huge move in anticipation of further down moves is tricky. So it may be that we just don't get a trade here. The market just continues to drop. On a swing trade basis, there just may not be any possibilities here. But 106 is the 105 to 106 is a key support zone. So it may be that there will get enough long-term buying to push up a move to 108. And then we can look at potentially resuming the downtrend to 105 and maybe even lower. So my feeling here is that we are on the cusp of a big down move in dollar yen if it's not prevented by the Bank of Japan. So again, all part of the kind of currency war situation. The Bank of Japan and Japan are basically losing here while China currently wins, and the US also probably losing, but not so much in this dollar yen situation. Let's move on from here. British pound. So we've tanked. Obviously, we've fallen through a cliff. We've come down to the 121 level. Now, similar to dollar yen in many respects, we've actually come down to key support. So 121, the beginning of this key support area, and 120 really being the round number to watch out for. It looks like we're going to take out 120, but you never know with these Brexit situations. All we need is just some semblance of a sign. Probably it needs to be from Europe at this stage, that they're willing to negotiate with Boris Johnson, or just a bit of a backtracking from Boris Johnson, a bit more of a conciliatory approach would be enough for us to get a rally off these major support levels. But I'll be in truth with you, neither of those seem particularly likely. So while you'd very much open to the possibility of a bounce from these levels, and it's potentially worth, when we get down to 120 at least, speculating on some sort of political change which could cause the rebound. But at the moment, you can see that we've barely nudged higher after, we've basically range traded, through here since hitting 121. There's not been any huge signs of a rebound. So what we're looking for is maybe we don't even get this, but maybe there's a little attempt to rally the bulls and get up to 122, which ultimately fails, and we get that move down to 120. So that's a possibility. If we hold above 122, things do look more optimistic at that point, and maybe we get a push up to 123, 124 at that stage. But I think to get up to 125 again, something materially different has to happen. And again, it's hard to see that happening at the moment. But maybe as we get down to 120 and below, that's when the possibility of just speculating on some sort of political change, even though we don't know what it is, the risk to reward more and more in your favor, obviously, as the currency drops towards some bigger, longer term corrective move higher. Over the next week or so, though, this 122 will be an interesting level to watch to see if we can fail there, opening up and move down to that key 120 level. Let's switch gears to commodities. So Brent crude. If you remember last week, I basically had the same range, except I was a bit optimistic on the bottom of the range, and I had that more up to here somewhere, which ultimately we did close out that big down move in around around 61, but we did get a drop to 160. So really, actually, needs to be more clinical and have the absolute lows defining the bottom of the range. So still looking for, basically it looks very much like this range might break to the downside, and if and when it does, then you adopt a more bearish strategy. But I'm still suspecting, especially today, given that there hasn't been as strong a reaction in crude oil as there has been in stock markets, for example, to this Chinese devaluation, showing a little bit of relative strength in oil. Something to watch out for is what China do in terms of buying Iranian oil. If China start buying Iranian oil, which is obviously sanctioned by the US, I think at that stage, obviously that takes away demand for more specific contracts like Brent. I think we would see oil collapse at that point, further down towards 55 perhaps in Brent. But if we don't get some kind of huge headline news like that, maybe there's scope for a little rebound, not even to the top of the range, but just up to mid-range, which admittedly we have attempted once already. We've gone up to 63. That got hugely sold off, but didn't get too much lower. Maybe if we get tempted into the lows again with a new sell-off, that might be an area in which you could look for a rebound. Maybe 65 is optimistic, but potentially 64. If 63 was the last time the barrier, maybe a bigger move to 64 potential here, if this range holds. So we want to see basically 60 hold on a daily close basis to give us the chance of the range holding and a move back into the middle of the range. If 60 gives way, I think it probably is time to get more bearish, but it may be difficult to catch it if it is based on some big headline news, for example, China and what they do with Iranian oil. Switching gears to gold. Now, interesting, that's hit, don't always use trend lines, but it's hit this kind of top sloping trend line. So potentially a corrective move, but only a small one, I suspect. If you look at how gold's been reacting, we tried to break through 1410 support, got down to the round number 1400, rebounded hugely off there, got a little retracement, probably 2/3 down to 1430, which held nicely. It was still a down day, but as of today, 1440 held as support. We're pushing up again. So if we do get any kind of correction from this rising trend line, I don't suspect it goes too far. You never know with gold. If we get a rebound in equity markets, sentiment turns around, then it's going to be a bigger dip. But to me, it looks like gold is off to the races. It looks like it's had its corrective move, and now it's breaking higher up towards that key 1500 level. So let's see how it behaves at 1450. If we get a move through there, then maybe we actually look to some sort of bigger retracement inside this bullish candlestick. But I'd still be looking for something like 1420 to hold for then that big move higher in gold to occur still. And I think you completely wipe out your bullish intentions towards gold if we do actually close below 1400 through this, where we've seen these key rebounds happening over the last couple of weeks. Switch gears to indices. Start with the UK. So if you remember this trend line I drew in a week or so ago, when things were looking a bit more bullish and less trade worry, the expectation was that we'd get a pullback. It was from around here down to this trend line for the rebound up here. Not necessarily to 7,700, but somewhere up maybe towards the highs. As you can see, we paused pretty much at the 7,400 level and this declining trend line, but we fell off a cliff again. It didn't get any kind of rebound from 7,400 or the declining trend line. Now the market looking pretty bearish. The FTSE was getting a bit of a lease of life thanks to the weaker pound. The pound is still weak, but still the greater force here is the sell-off globally in equities. And if US stocks are selling off, which are the best of the bad bunch, which are near record highs, would you really hold on to UK shares with all the Brexit uncertainty? It doesn't look like it. Looks like we're in the midst of a big sell-off in UK shares. Potentially, if we do get a little pullback, rebound in sentiment, first look to 7,300. I doubt we get up to 7,400 again. Excuse me. Stranger things have happened at sea. Well, obviously, this could just be a nice little correction to buy into. Doesn't look like it though to me. And based on the news flow, it looks like we've probably got further to go. Look at 7,300 and then potentially a retest of that key 7,000 level. Over in Germany, we've had a huge failure at 12,500 in effect. Got a false break here, came down, tried to get through it again. Big bearish daily candle straight through the 12,000 level. No sign of support buying at 12,000. And so a potential scenario looking at here is that maybe we get a bit oversold into support at 11, where we've dropped through 11,700, but 11,600 just below this previous low. And you can see sort of generally through here, I don't know where it's a kind of blended level of support, but you can see through these highs here, this low, all the way through this sort of 11,600 level is, and you could maybe argue down to 11,500 as well, is some sort of pivot level. So maybe we get a rebound instead of buying off there. If that rebound can take us up towards 12,000, that then provides the entry point potentially on a swing trade basis to look for further declines. And finally, we'll just look at the US stock market. This is where I've left the the chart completely unchanged from the webinar a couple of weeks ago. And as you can see, the market perfectly drew out that line that I had into that area of support that I had. But as is often the case, now that we're actually at the support level, it looks like breaking. But let's see if we can get a higher close around 2,900. I think that would offer a lot of better feelings out there. Arguable that we've gone through an unusually large decline and some sort of dip buying is going to come back into the market. That's what we had forecasted when the price was up here. We said we didn't want to buy this anymore because it just kept moving higher. We were due a correction from 3,000. We thought just 100 points lower down to 2,900 might be it. So that's what's happened. It looks pretty bearish at this stage, but let's just see how the market behaves at 2,900. If we get a big rebound from here, then who knows, that might be the correction over. And our previous suggestion was a move up to 3,100, which in the context of a bullish market, that would be fine. Obviously, our predictions on the other indices are a bit more bearish. So given the kind of speed of this decline, you know, you've got to, if we do get a rebound from this area, you know, certainly look for something more like this, where we come back to what I think is a key pivot in here at, what's that, about 29.60. See what, let's see at 29.60. It might be a point for, if we do get a rebound from 2900, which is far from certain at this point. 29.60 might be an area to manage the trade, and then we can see from there whether in fact we get another leg lower down to 2800 or 3100 comes into play. Right, I'm going to leave it there. Thank you very much for attending, everyone. Good luck with trading for the rest of the week. This is Jasper signing out.